Hey, what's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. And today, it is a green day over here in the cryptocurrency market. Bitcoin's price is up about $1,000. Most of the market is green, as you can see over there on the right side of the screen. In yesterday's video, we were talking about, hey, today things will probably be pretty chill if we're going to continue doing what we've been doing for the last 2.5 months, but that, hey, look, Bitcoin's followed a very specific bear market fractal the entire way down in here. And if it's going to continue doing that, you could see that a double bottom eventually did come in here. So I keep that in the back of my mind. Today's great, but you know what? Having expectations of what's coming, right? That if it goes back in double bottoms, we're probably going to see those altcoins pull back down with it too. But otherwise, it's nice to see that, hey, look, we're still following that. This is all good stuff. This is all indications of what it looked like when a bottom was coming in. So lots of fear out there in the market, lots of pain out there in the market. That's typically what happens at bottoms. Just like at tops, there's lots of excitement and euphoria and expectations that things are going to keep surging. Bottoms are marked by fear and panic and worry. But we're not going to spend this whole video looking over here at Bitcoin or looking at the altcoin market. In yesterday's video, I put one out on Tuesday, which for the last several weeks I've been trying to just do Monday, Wednesday, and Friday. But yesterday I mentioned that we're going to talk a little bit more about the stock market today. And while I don't have all the answers, today's a pretty big day. As you know, a lot of the attention got brought to the cryptocurrency market by a lot of media narratives about inflation, and inflation did come. Now, the people who were here in 2020 and recognized that we were printing trillions of dollars, anticipating, hey, inflation's going to come. We can't just do this and inflation not come. Well, hey, inflation eventually came. And then that's when, the masses really poured into crypto once the media blitz began to start scaring people about inflation. But what happens if you start screaming about inflation and the inflation starts rising and you're yelling at the government to tell them to do something about it? You might just get what you asked for. And today, the Federal Reserve is going to come out this afternoon and they're going to talk about rate hikes. They're going to talk about quantitative tightening in order to fight off inflation. Now, remember, in 2020, inflation was disregarded. It's going to be a non-issue. We're not going to care about it. It's not going to happen. It's going to be, and then eventually it's going to be transitory, right? It's just going to be transitory. Now it's like, all right, it's here. It's not going to be as transitory as we thought. Now we need to fight it. And so yesterday and today, the Fed has been having meetings, and then today they're going to release a statement this afternoon on what their plan is. Now, they've been communicating that rate hikes were going to be coming this year. So are rate hikes going to increase value for the dollar, or has everything already gotten too carried away and the rate hikes aren't going to do anything? Or is this temper tantrum being thrown by the stock market going to cause the Federal Reserve to change its mind? You can look back on this and see what this thing has looked like the whole way up. We have seen the biggest drawdown in the NASDAQ since the C19 sell-off. Is this a threat being made by the stock market to the Federal Reserve saying, don't you dare overdo it? And well, the big question is, will they? And today, we're going to find out from their mouth what they're really planning on doing and what are their thoughts now that there's been all this volatility over here in the stock market, fearful of this. Now, your guess is as good as mine of when the big fall is eventually going to happen and whether or not it's going to happen from right here or if there's one more explosive move. The last year or so, we've been looking at what happened in the roaring 20s before the Dow Jones eventually collapsed into a Great Depression, and how incredibly similar this whole structure was in here with the setup that eventually led to the big explosion that happened in here. And we could see all these levels of where all these things occurred at and how there was a big volatility area right in here before it went on to have its final push to the upside. So all the volatility that we're seeing in here currently doesn't deviate from what did happen before the final excessive move of the stock market eventually came back in the 1920s. But we can all see what happened next after that last move. So if this thing even plays out like this, you're looking for one excessive move. You'd have to say to yourself, are there any other things that validate that is a potential thing to occur in here outside of just looking at a fractal? And for me, of course, it's about Fibonacci extensions, right? I look at fibs and I say, okay, what about this? Yeah, that does get you up to the 4.236 extension. We know that the S&P 500 got up there, and we know that the Nasdaq has almost gotten up in there. And the thing that's different about the Nasdaq is that for the S&P 500 and for the Dow Jones, that's based on peak to trough of when the great financial crisis happened. This one dates back even further, so that's only what, 12 or 13 years for the Dow Jones and the S&P 500. But looking over here at the Nasdaq, this dates all the way back to 1999, 2000. So we're talking like 22 years for this one to be printed up in here as we approach this level. So do you have any confluences there saying, hey, does that fractal from the roaring 20s have any potential with what we're dealing with right now? And I would say it does, considering that we have on all these different time frames these 4.236 extensions coming in for different indices. Then, my sinister self looks around and says, well, what's happening with government officials, right? So on October 21st, Fed officials will be banned from owning individual stocks, Jerome Powell says in new guidelines. Responding to growing controversy over investing practices, the Federal Reserve on Thursday announced a ban on officials owning individual stocks and limits on other activities as well. So, right here on the Dow Jones, right in that little box right there, is where the Federal Reserve officials are required to sell all of their stocks. That's interesting to me. Now, this is starting to gain some momentum. That support grows for limiting Congress members' ability to own stocks. Recent allegations of lawmakers potentially benefiting from personal stock market trades has propelled a new interest in reining in their ability to trade or own individual stocks while in office. And then here's Nancy Pelosi. If members want to do that, I'm okay with that, she said. But she rejected the idea that a ban is needed because lawmakers cannot be trusted or act ethically. I just don't buy into that, she said. And what we're now seeing is a lot of momentum pick up on the idea of forcing Congress to sell off all of their stocks as well. Now, of course, it's being put under the narrative of ethical concerns, and they're calling it are not allowed to own. But are not allowed to own means sell. It's the exact same phrase. But what's interesting about that is how close to this 4.236 extension we're reaching that Congress is now under the potential storyline of not allowed to own, which means must sell up here, right? We've had the most loosey-goosey financial monetary policy over the course of the last 12 years. And it just so happens to be as we get up here, Federal Reserve officials have to sell off their stocks right here. And October 21st over here in the S&P 500 was literally right here when we were hitting that 4.236 extension was when they banned members from owning stocks. They literally did it at the 4.236 extension. That's crazy to me. The phrase is not allowed to own, but it literally means they all have to sell. Everybody has to sell now. We've hit the 4.236 extension. And then now we're getting to the potential that Congress is going to have to do the same thing. Now, like I said at the beginning, I'm sinister about it all, right? Part of me thinks there's no way they're going to let this crash happen before they make themselves sell. Right? Because the reality is you can't just have all of Congress suddenly dumping all their stocks and selling off for no reason. That will completely panic everybody. But if you create a story saying that for ethical reasons they're not allowed to own, well, that changes things. It doesn't really create all this panic because people are upset about it, right? They're upset that Congress has benefited so much from all of this. They have insider information. They know when to go long. They know when to go short. They know what the policy changes are going to be. They know who's going to be the winner. They know who's going to be the loser. So the general public is on board with this idea that members of Congress should not be allowed to trade stocks. And I'm on board with that idea too. How can members of Congress actually be looking out for the best interests of the general public when their own pockets are getting lined? It's totally unethical. I totally agree. The problem is the timing of it. There's been no problem with it from Congress, even though everybody's been in an uproar about it for forever. But it's never become this situation where Fed officials are not allowed to own, Fed officials must sell, and then now potentially Congress is about to have to sell. But the deal is Congress isn't forced to sell yet. We haven't hit the 4.236 extension yet for the NASDAQ and for the Dow Jones. And if this is the top where we're at right now, it's pretty unusual that the entire general public gets to be this scared this soon. They get to be this scared at the top. But I'll take a lot of that off the screen. I'll kind of brighten up that box a little bit, but you can see Fed officials all got to sell their stocks up there at that green box. And now what is the narrative? Rate hikes, quantitative tightening, all this stuff, right? That's funny. They get to sell everything and then now suddenly they're worried about inflation. And again, that's me being very sinister, and maybe I'm overreading into it. But what we know is that Congress has played a really big role in all of this and spending, spending, spending. They want to get out of their positions too, right? You think they're just going to let themselves get completely crushed by the market? I find it really hard to believe that that could happen. And while we're seeing a lot of volatility in here and a lot of worry right now about all these rate hikes and what's going to happen today, still lean back on this that Congress is still trapped in all their positions, all their longs. They can't just sell off for no reason. And they're definitely, I just could not imagine with what just happened with the Fed and how they got to sell that local top that Congress is going to be forced to panic sell into a big crash. I really, really doubt it. But that the volatility that we're seeing and the worry that we're seeing right in here is similar to what we had happen back in here, back before we did go off and have the final excessive move. And the reality is, we talk a lot about crypto, right? This is mostly a crypto channel, and that cryptocurrencies have a tendency to follow the stock market. And that we can see why crypto hasn't done very much lately because the Dow Jones has been ranging ever since May. But that if this continues to play out like this and all this worry about the Fed and right, they're going to come out and do their meeting today. I don't know what's going to happen right after the meeting. We're going to get an answer, right? Is the market going to trick, right? A lot of times when these things come out, the prices can fire up as the initial response, and then eventually it turns over on itself. Or the first thing that can happen is it can fire down, and then it usually goes the opposite way. Typically with these Fed meetings, the first initial move that we end up seeing is not the real move. It goes the opposite way. So I think one of the optimistic things would be is if right when the Fed meeting actually happens, we see prices dip down really fast to make people think it's gloom and doom, because what we usually see is it flips back the opposite way. Either way, well, I don't know how that's going to play out. But my grand perspective is that there's still more room up in the stock market to go, so long as this does continue to play out, and so long as Congress does have this sinister plan that that it's just a hunch, right? Because of what the Fed did. But if Congress is going to ban themselves from owning stocks, or in other words, make it mandatory for all of them to sell, I would assume they would have to do it into positive price action, just like the Federal Reserve did. But that does tell you what the long-term picture is right now, right? The Fed is out of the stock market. The Fed officials are out. And if Congress gets the opportunity to get out somewhere in here, and if we have something play out like that and Congress gets out too, man, you have the whole fractal playing out. You have the 4.236 extension, and then you have the government who day traded the whole thing all the way up on insider information sells. That's not good. And while I don't know how all of it will play out, I can create all these crazy theories in my mind, and maybe I'm just completely delusional. But so far, the Federal Reserve members have sold the top. Congress is all laying down the groundwork for having the same thing happen to them. The NASDAQ and the Dow Jones are just shy of their 4.236 extensions, and the fractal is having the same volatility at the same area that we did during the roaring 20s before it had one final push to the upside. So what does that mean for crypto if this plays out, right? Well, I've spent way too much time talking about how tied crypto is to the stock market. I would suspect this is our big blow off in the market. This is our big run for crypto that would happen in the market so long as the Dow Jones does break up higher. But that'll be the end of our bull run for the altcoin market. I think the bull run for Bitcoin's already over. I think the bull run for a lot of large cap equities may already be over as well over there in the stock market, such as Netflix, which, I posted about this over there on Twitter earlier this week, I believe over the weekend. Here you go. You have your crash, retrace, reaccumulation, your double tap on top of the all-time high. If this was going to be continuing higher into a higher bubble, one would think it would have stopped right in here. This must have just been it. There's your little bull flag. There's your back test. There's your ride up. The fact that that Netflix has already fallen this hard, it reminds me exactly of what Ethereum was like when Ethereum popped back in 2018 and came back down into these price levels. And that, it does mean a retracement does eventually come in, but that Netflix has already popped, one of the large caps. Amazon, right? Consolidating for nearly 2 years, a year and a half in here, finally breaks down to the downside. Google, same story. Consolidation up here for about a year, and then finally a reversal down in here. And we could see all the indexes, man, just a plunge happening in here after all this grinding. And then finally, boom, free fall. So what would be really interesting about the stock market in this circumstance is the things that we've seen happen in markets previously. We don't have a lot of experience from the stock market in general for our generation because we haven't had these big, massive pops happen in many of our lives, or many that we can remember. But we do have examples to look back from markets, and in particular the cryptocurrency market, and how these things have played out. That once the large caps popped, it was all the smaller and medium caps that eventually went on big runs. And when you look at things like Google, Netflix, Amazon, all these things that have had these huge runs, and you look throughout the rest of the market for companies that perform relatively well, such as Ford, one that I talk about frequently. I don't talk about too many stocks, but Ford recently just broke out of a 20-year plus range down in here. And this whole sell off that we see happening here, you can see this is a very nice Wyckoff accumulation that happens down here for Ford, which started in 2001 and it took until 2021, 20 years to break out of this accumulation. Big breakout. This crazy price action we've had in the stock market the last few days is a back test of the breakout level, a 20-year breakout level. And so what I'm intrigued to see is whether or not we're going to have something like an alt season happen in the stock market for that parabolic blow off top over there in the Dow Jones to give that final excessive move, and that maybe these big caps are already done. Now, I don't follow the stock market because I actually have a ton of interest in the stock market. Really, only about 1% of my net worth is actually in the stock market. I follow the stock market to have an understanding of the macro perspective of the cryptocurrency market. Because my thought process, based on analyzing the Dow Jones and analyzing the cryptocurrency market and Bitcoin, is that Bitcoin was incepted at the depths of the great financial crisis, and that so long as the Dow Jones has remained in a bull market, Bitcoin's been in a bull market. However, every single time that the Dow Jones has gone into ranging time periods in here, so did Bitcoin, and not just ranging for Bitcoin, but bear markets for Bitcoin. 90% losses, 80% losses, and again, 85% losses all happened during periods of where the stock market paused out or where the Dow Jones paused out. And that now we know the Dow Jones has continued to range in here, right? It peaked on May 10th and then has just been in a ranging slop action ever since May 10th. I talked about that in yesterday's video. But I'm optimistic that there is still another push up in the stock market, which translates into the cryptocurrency market. But I'm not fooled by it to say it's then going to become a game of hot potato at that point. At least that's the way I'm treating it. I've been in this market for a very long time. I've had my convictions that have helped me hold through all the volatility, and we're all dealing with a ton of it right now, and a ton of despair and a ton of depression out there right now. I've been through probably 6 of these, 7 of these moments. And then, of course, 2018, 19, and 20, it was one long period like this. But once that happens with the Dow Jones, so long as it does happen, it's going to be hard to contain or remain with bullish conviction beyond that point. Because while everybody is worried about inflation and considers cash is trash, in that type of circumstance, and we all know it who've gone through bear markets in crypto before, that cash can be king. And so, what's my guess on what I think is going to happen with the stock market? Well, based on the things I see in the cryptocurrency market, that we see Bitcoin lining up for a retracement, which ultimately has led to surging price action over there in the altcoin market. I like those conditions that I see over there. That's telling me a story. We've talked about that too many times at this point. I won't bring that into this video. But I look over here at the Dow Jones and I understand that the NASDAQ and the Dow Jones have not hit 4.236 extensions. And I understand that the fractal and the bubble fractal for the Dow Jones is showing a lot of volatility where it has shown volatility before. And I also know that Congress has not gotten the opportunity to sell off their stocks yet. So I just don't know the answer, but my hunch is there's still more up in the Dow Jones. But today, this afternoon, we'll have the Fed come out and we'll see what this market does end up doing. The market is throwing a temper tantrum over the course of the last 2 weeks heading into this. If you haven't been following the stock market very closely, we can look at the price back there on January 13th, and it fell a total of 3,355 points, a 9.9% drop in the Dow Jones in a total of 7 trading days. That's a big drop to happen in the Dow Jones in 7 trading days. And then right here at the bottom, just in this day, at one point, it was down 1,000 points and then ended up closing up 290 points. And since then, it's been marching up and up now that we're getting closer and closer to this meeting. So the meeting's today. I remain optimistic that I still think there's going to be a break to the upside, but we all know where we are on the big picture right in here. Whether you want to believe that, 4.236 extensions matter, or if you want to believe that, fractals matter at all, to me, that they have weight to me. They have weight on when I get fearful, right? Everybody says, be fearful when others are greedy and be greedy when others are fearful. And typically people only say that when price action is low, like right now, right? Be greedy when others are fearful. But you saw what happened back in, October and November. Like when I'm being fearful, and if you're expressing that, the whole world is screaming at you that you're wrong. Nobody is saying this whole be fearful when others are greedy and be greedy when others are fearful when the whole market is greedy. They don't say that. They only say that during the depths of despair. But I always try to show you guys how I get nervous when things get greedy. And right now, I recognize that really the whole market is fearful, and not just in cryptocurrencies, but over here in the stock market too. Everybody's pretty fearful about this Fed stuff. Everybody's pretty fearful about this, 9-10% drop that's happened in the stock market in 7 trading days for the Dow Jones. But what I keep getting pulled back to is it has not reached out to a 4.236 extension. We saw the S&P 500 do it, and as weird as it seems, we've seen this movie before. And so for me, I'm holding on to the faith that there's still that additional move up remaining in the Dow Jones. I think if Congress finds some way to make it to where they all are banned from owning their stocks, that's going to be the complete panic moment. We all know that means they're forced to sell. And the sinister part of me doesn't think that they will force themselves to sell or force themselves to hold into a collapsing stock market. I think they would, if they're going to do anything like that, they're going to do it before the big crash comes. And we know they haven't done it yet, but they have been laying down the groundwork after the Federal Reserve did do it. And so for this, I remain optimistic for my other thoughts that come with the cryptocurrency market, that we can see a big rise happen over there in the altcoin market. But like my beliefs are over there in the cryptocurrency market, right? My thoughts are that the large caps have topped. The ones that have gone on to big bull runs like Bitcoin and Ethereum have topped. And I'm playing it as if the opportunity is into the small and medium caps that haven't taken off yet, that haven't broken out into new all-time highs. And I'm treating the stock market the exact same way. I own none of those large caps. The 1% of my net worth that is in the stock market is in the smaller caps that haven't taken off yet, or the medium-sized caps that haven't taken off yet, like Ford and GE. I don't know if they'll play out that way, but that's the way I've seen markets play out in the past, and that's the way I have to play my cards. And so, lots of volatility out there over the course of the last 2 weeks here for the stock market heading into today. This Fed meeting will come out this afternoon. We'll hear what they're going to do, what their thoughts still are on rate hikes, all that crazy stuff, quantitative tightening, and we'll see how the market responds to that moment once we get it. But I thought it would be important today to talk about the state of the stock market right now, that we are seeing some big volatility and downward price action coming in from these large cap stocks, the ones that make up the bulk of the indexes, that the Dow Jones does have a volatility range like it did back here, like in the roaring 20s, and that there's been a lot of negative price action heading into today, into this moment. So the market's been very fearful for quite a while since the Fed spoke last, talking about interest rate hikes coming here in 2022. Today, we're going to hear them reaffirm what their thoughts are and what the realistic numbers are still looking like for 2022, and whether or not any of this volatility in the stock market is actually having any impact on their decisions. So today's a big day. I'm sure we'll kind of recap it later in the week, and I'll be over there on Twitter today, kind of retweeting stuff and seeing what they're saying, and sharing other people's analysis on it. I'm not an expert on reading the Fed, but I do follow people who are experts on it. So I'll share the thoughts that they have. And hopefully, when this is all done and all the analysis has been done, people recognize that, hey, it's not so bad for right now. Let's keep on pumping. But today's a big day. We'll see what happens. But all right, guys, that's going to be it for today. I hope that you enjoyed this. It was a little all over the place. I know I don't really spend too much time doing full videos on the stock market. I'm usually spending most of my time over there on the crypto market and kind of know my way to bounce around. So a little bit different today. I want to thank you so much for watching. If you're looking for something to do, of course, you could check out my website over here. This is bcbacker.com. This is a course that I put together where I deep dive into the cryptocurrency market and the Bitcoin market, previous cycles, how this cryptocurrency market has worked in the past. I talk about my personal exit plans in here, and I teach you how to set up your own charts and your own indicators within TradingView and CoinTrader Pro so you can do your own charting. I talk a lot about mathematics and percentages and why those are so important to me, and the most recent market update is in there on December 31st. And you can check out all of this educational content over here on bcbacker.com. You could follow me over here on Twitter at bcbacker. I'm sure it will be a busy afternoon over here on Twitter. And I want to thank you so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick me up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.